Everyone, this is your Manuishu and I'm again back with the new video on the past paper of ACCA F5, also known as Performance Management. So in my previous video I have discussed a few past paper as well. So in case you have been missed out those video, you can still access it from the playlist available on my YouTube channel at free of cost. But please guys, don't forget to subscribe my channel, and the more you subscribe, the more you like, the more you comment, it will motivate me to make more videos. So being content creator, so these are the motivation factor, right? So I hope you guys will love this video and you will share among your friend as well. So let's start the today video, and it's also the one of the past paper from December 2022 attempt. And the question is from section B. Question name is SKulpt. So before moving to the question, let's have a rough background about this company. The company SKulpt is a manufacturer of electronic goods. One electronic device it produces and sells in the GSA is the GSA, and there are between 30 to 50 other suppliers of the similar. So there are more competition, right? But not identical device in the SKulpt market. Okay, so they are not identical. So each producer enjoy very just a second. Alright, so each producer enjoys varying level of customer and the brand loyalty. So current selling price for GSA is $250, and SKulpt director are considering a reduction in the price to $230. Market research commissioned by the company has suggested that price elasticity of the demand for the GSA is 1.25. The same market research suggests that the price schedule and the marginal revenue schedule for the GSA in the current market are as follows. So they have given the equation of the demand function as well as your profit maximization equation. So as I have been told in the one of the previous video that sometime the examiner will provide you the demand function as well as the this price and the change in the price and the change in the demand, right? And sometime you might need to calculate. So here they have already provided, so we don't need to calculate the same, right? So let's move to the further background. Okay, so production and selling cost for the one GSA are as follows. So they have given the selling all of the cost and the new customer order. A new customer loco has approached to SKulpt with a bespoke. Bespoke means you're like a specific one of the order of 5,000 unit of GSA. The unit will be produced in SKulpt factory along with the all of its usual production and delivered to local company using the SKulpt usual distribution channel. The order is considered bespoke as Loco has requested some additional finishing in the production process, which will generate an extra production cost of $6 per unit. The unit must also be delivered using the special packaging cost of $2 per unit. The special packaging will be paid for and supplied by the Loco. The variable cost of the GSA include the current purchase price of $7 and the 7 per unit for an electronic chip, and GSA is popular product. The chips are in the constant use and SKulpt has sufficient inventory of these chips to satisfy the loco order. The chips in the inventory were purchased several months ago at the discount rate of $5 each. See, this new customer loco has they want a specific product and they have told that SKulpt they want these things in this order. So in this paragraph, the whole paragraph is describing the material that are used in those making those order unit, and whether they are having an inventory or not. It seems to be like they are they will be asked something like relevant costing question related to the relevant costing. Okay, a markup of 20% is usually added for the all one of the order. New market, this is the separate paragraph. SKulpt wants to sell the country of Harekish, which now allows the sale of GSA. Following a change in its laws, SKulpt objectives are to set a minimum acceptable price, which is most likely to discourage the new entrant and shorten the initial period of the product life cycle. Harishko to reach the growth and the maturity stage quickly. So this is all about the background of the the company. Let's move to the question, and we might need some background information. Let me do the copy paste. So first question is asking which of the following factor is least, means less likely to be considered by SKulpt when setting its price in its hometown. There are various factors that we need to consider while we are setting the price of the product, like its cost, its demand, like what's the approach of the competitors, right? So we need to consider lots of factors. So question is asking out of this option, which one is less likely in case of setting a price? So let's evaluate the option one by one. So first one is customer demand. See, as we know, if we increase the price, the demand will fall. If we decrease the price, the demand will increase, right? So obviously customer demand is important while setting the price of the product. Don't you think that? So obviously the price would let to know us what the demand would be. So A seems to be like most likely to be considered. Second is manufacturing cost. See, if we are setting the price of the any product, that means selling price, so we will also consider the cost that involved in manufacturing those products. So if we don't consider the cost, if we don't consider the cost, so how can we determine the profit? So it's very important to consider the manufacturing cost involved in the production of that unit. Okay. And next is your competitor price. Competitor action is also very important because if you don't know what the competitor is like charging the price for the same product, then how can you decide your price? Like if if the competitor charges suppose $10 for a certain product, so you must charge below 10 or exactly 10, but you can't go above 10. If you go above 10, then no one will buy your product, right? So that's why competitor step is also very important. So last is currency in its home market. So if you are selling the product in a home market, so currency will not not be considered while setting the price of the product in the home market. Okay, I hope this is clear now. So let's move to the question number 2. Yes. See, what question is asking? Which of the following statement about the price elasticity of the demand for GSC is true? Okay, so price. I think in the somewhere in the question they have provided the price elasticity of the demand. Yeah, this is the price elasticity of the demand for the GSC is 1.25. All right, so here the question says which of the following statement about the price elasticity of demand for the GSA is true. Okay, so we need to find out any one option which is true for the price elasticity. So first is the demand price. If its demand is price elastic and revenue will increase if price is decreased to 230. In the question somewhere it has been mentioned that here that the current selling price is 250, but if the company is planning to reduce to the 230, right? So if the demand is price elastic means if customer if your demand is price elastic, it means a small change in the price could lead to the significant change in the demand. Okay, so that means you can also verify this with this equation, like what is the demand function given there? Demand function is your P equal to 450 minus 0.2Q, right? So if your price is supposed 250, at 250, what would be the my demand? Let's find it out. Okay, so here 450 minus 0.2 Q. So solve this value in order to get the value of Q. So if you solve it out, you will get the value of Q as 1,000. Okay, so you will get as 1,000. And similarly, if you solve for the other price, 230, then your demand, sorry, just a second, what I did, yeah. So your quantity will be here, it's 1100. Okay, so if the price if the demand is price elastic, in that case a small change in price could also lead to the significant change in the demand, right? So price is only reduced by 20, but the demand changes by 100, right? And the first statement says that if its demand is price elastic and the revenue will increase if price is decreased to 230. So if at the price 230 we sold out this quantity, so what will be my revenue? My selling price is 230, and if we sold out 1100 unit, then my revenue will be 253,000. I think I added one extra zero. Yes, it will be 230. Yeah, and similarly for the, if we talk about the previous one at 250, what will be my sales revenue? It will be 250,000. So you can see the sales revenue has also been increased. So option A seems to be feasible, right? So I have shown you by the example that how revenue will increase, right? I hope now this is clear. Next question. What is the profit maximizing price for the GSA? So in my previous video, I have told if the question is asking for the profit maximizing price, in that case we need to follow the 3 steps. The first step is to formulate the demand function. But in our case, the question has done this for us, right? So what is the demand function? That is the P equal to 450 minus 0.2 Q. So this is the demand function. Now second step is to equate the equation, that is the MR equal to MC. And this is a point where your profit will be maximized. And what is the value of MR? MR is, it's also given in the question, 450 minus 0.4 Q. Basically, it is a double of this 0.2 will be double in case of MR. Rest of the things will be same. And MC means your variable cost, and in our case variable cost is 30 plus 24, that is 54, right, per unit. Now if we will equate this, that is 54 equal to 450 minus 0.4 Q, and solve this in order to get the value of Q, what would it be? So plus 450 minus 54 and divide it by 0.4. This will give you the quantity 990. Now you have to put this quantity again back to the equation, I mean step 1, and this will give you the price, that is the 450 minus 0.2 into this, and this will give you the value of 252. So this is the price where profit will be maximized. So you need to follow the 3 step if the question is asking the to calculate the price where profit would be maximized. So first you need to find out the demand function, but in our question they have already given the same. Then you need to equate the MR equal to MC equation. So this is the point where the profit will be maximized, and MR and MC value is known. Then once you solve this equation, you will get the value of Q. So in third step, you need to put the value of Q back to the step 1. So you will get the price. I hope this question is clear now. Okay, so fourth question. What is the minimum price per unit which could be set up by SKulpt in respect of local order of GSA? So as I said, this question is related to the, I think your relevant costing. So here, in order to set the price for the order of loco, so we need to consider all the relevant cost. Okay, so we need to consider all the relevant cost, and let me make this small so that we will look to the background. Yes. So in order to find out the price, so what we need to do is we need to consider all the relevant costs associated with this order. Means any future cost, incremental cost, or any cash flow due to this, order, we will consider it in the price. Okay. So new customer Loco has approached to the SKulpt company with a bespoke one of the order of 5,000 unit of GSA. The unit will be produced in SKulpt factory along with all its digital production and delivered to Loco using the SKulpt usual distribution channel. The order is considered bespoke as Loco has requested some additional finishing in the production process, which will generate an extra production cost of 6 per unit. So unit must be delivered using a special packaging cost of $2 per unit. Special packaging will be paid for and supplied by Loco. The variable cost of production GSA include in the current purchase price of 7 per unit for an electronic chip. As the GSA is popular product, the chips are in the constant use and the SKulpt has sufficient inventory of these chips. So to satisfy Loco order, the chips in the inventory were purchased several months ago at the discount rate of 5 each. See, so Loco has ordered a GSA, but this customer want any special additional feature in this product, right? So basically, if we talk about the GSA production cost, it's 112, right? But we can't take all this cost to decide the price. Why? Because the fixed cost will incur anyhow whether we are producing the Loco order or not. So here variable cost will be the additional cost. So that is your 30 variable production cost of the 30 and the variable selling and distribution cost of 24. Okay, so this fixed cost, that is a total fixed production cost and the fixed selling and distribution cost, will not be changed if the SKulpt either take the order or not. So this will not be changed, so this will incur anyhow. So that's why relevant cost will be 30 plus 24. And rest other cost, if we look out this paragraph, the rest other relevant cost will be your let me see. Yes, here question told that the additional extra production cost of 6 per unit might incur. So this will be relevant along with this 30 and 24. And the unit must also be delivered using the special packaging cost of $2 per unit. See, this special packaging cost is like, this is also the extra cost and is relevant, but this will be paid by Loco, so that's why we will not take this into the consideration. Okay, and the next one is the variable production cost to include the current purchase price of the 7. So this current purchase price of $7 per unit for the electronic chip. See, this 7 is also relevant, but it has already been included in this 30. So that's why we will not count this, otherwise it will be double. Okay, and rest of the your as the GSA is popular product, the chip are in the constant use and SKulpt has sufficient inventory of this chip to satisfy Loco order. The chip in the inventory were purchased several months ago at the discount rate of 5. So this is the history cost, the sunk cost. So we will not take this into the consideration. Okay, so now what will be the relevant price for this particular the order? So that is the 30 plus 24 and the 6. So these three will be only be the relevant. Okay, and the question is asking the minimum price, so that's why we will not include markup or margin. Okay, so this is the minimum price, so company cannot go below this, but they can go above this, right? So I hope this is now clear. Okay, so next question is, which two of the following pricing strategy are most appropriate for the SKulpt Co in order to achieve its objective in relation to the selling the GSA in the hierarchies? Okay, so we have read in the first, while we're reading the scenario or background of the company, we also got to know that the company is planning to launch their product in the new country. Right. So question is asking, in the last question, the question is asking, which two of the following pricing strategy are most appropriate for the SKulpt in order to achieve its objective in relation to the selling the GSA in hierarchies. So basically the objective of the company is to set the minimum acceptable price which is most likely to discourage new entrant, and other is shorten the initial period of the product life cycle in hierarchies to reach the growth and maturity stage quickly. Okay, so first is your so if we evaluate the option, our transfer pricing and complementary product pricing is already out, so it did not link to the scenario, right? So if we talk about the market scheming, so basically in market scheming we used to set up the high price so that uh, and we will lower it in the latter stage of the product life cycle. But in our case the objective of the company is to charge low price, right? So that they will discourage the market entrants. Yes, so again this will not be acceptable. Okay, so now if we talk about market penetration, in market penetration strategy we initially set the low price so that the customer will be attracted, and we can grow the customer base very quickly, right? And also the company is planning to have a short life cycle of the product, so this seems to be feasible, appropriate. So C is seems to be appropriate. Relevant costing price, so obviously, as we see in the previous question, we use a relevant costing to drive the minimum price. So similarly, a company can use this strategy as well to achieve, to determine their pricing strategy, right? So this also seems to be appropriate. Okay, and regarding the price discrimination by the product version, so basically SKulpt is following a price discrimination strategy but based on the location rather than the product version, right? So that's why only C and D is correct. Okay, so now we have covered this past paper section B as well, so I hope you have enjoyed while solving this question. So please don't forget to subscribe my channel and share it among your friends so that they could also have the benefits. The more you share, the more it will makes me happy, right? So thank you so much guys for watching this video and have a good day.